This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, June 20th, 2016. Euro dollar. So the euro overall continues to chop around and there's no clear directional insight at this point. The key levels to watch above and below come in at 114.16 above and 110.98 below. Clearly over the past couple of sessions we've seen a nice little bounce, but it'll be interesting to see if the market can establish back above 114.16. If we do see a daily close above 114.16, this will do a good job of opening the door for a retest of the key 2016 high at 116.17, which guards against more critical resistance further up at around 117.10. However, if the market is unable to establish a daily close above 114.16, look for another topside failure in favor of a fresh downside extension back towards 110.98. Sterling dollar. So cable has seen a nice bounce out from 140 over the past few sessions, with the market ripping back up all the way above 146 ahead of this latest minor pullback. At this point though, if you look at the price action over the past several months, the market has been confined to a broader consolidation, and any rallies up towards the range high in the 147 area have been well capped, while dips down towards wall at 140 have been well supported. And so look for this latest rally to once again be well capped ahead of the potential for another downside break. Dollar yen. So dollar yen remains confined to a downtrend, with the market now focused on a break towards potentially a measured move objective at the 100 area. At this point, any rally should be very well capped up towards the 107 to 108 area in favor of another lower top, while ultimately only back above 111.45 would compromise the bearish outlook. Euro Swiss. So a nice bounce for Euro Swiss in recent trade, with the market once again finding some solid support down towards the 108 area. At this point, there is risk for another bounce back towards the recent range highs at 111.30, which guard against that yearly and multi-month high at 112 further up. Aussie dollar. So Aussie has been confined to a consolidation and content to consolidate over the past several sessions since rallying out from recent multi-day lows at 71.45. If we do see gains extend through the recent peak at 75.04, this could take the market up to a critical resistance point in the form of the 61.8% fib retracement off of the 2016 high to 71.45 move, which comes in at 75.70. Dollar CAD. So despite this latest minor pullback in dollar CAD, the pair continues to show signs of the potential for a base, with a higher low now sought out at 26.55 that will be confirmed on a break above recent highs at 31.89. If we see a break back above 31.89, this will open the door for the next major upside extension towards the 135 to 140 area. However, if the market does trade lower and takes out 26.55, it will negate that basing prospect and open the door for a more immediate retest of the 2016 base at 24.61. Kiwi dollar. So Kiwi continues to be very well supported on dips, with the market now looking to push back towards that recent 2016 peak from the other week at 71.48. But ultimately, there's some critical, more medium-term previous support now turn resistance in the 71.70 area, and the market will need to establish back above that level to open the door for a more significant structural shift. Until then, there's risk for another topside failure, though we'll need to see a break back below 69.63. That's the low from last week on the 15th of June to officially put the pressure back on the downside. SPX 500. So the S&P 500 is largely continuing to show signs of stalling out on rallies above 2100 and could be in the process of putting in a more significant top. At this point, there seems to be another topside failure above 2100, with that recent 2016 peak at 2121 going back to the 8th of June. But the market will need to establish ultimately back below 2020 to really strengthen the topish bearish outlook and accelerate declines. Until then, there is risk for another topside test and a break towards those retest of fresh record highs from 2015 at 21.33. Gold. So gold has done a good job being very well supported in recent trade on that recent dip down towards 1200. The market is showing signs of a more significant structural shift and major base, with the latest break to fresh 2016 highs at 1316, opening the door for the next major move towards 1400 further up. At this point, look for any setbacks to be very well supported towards the 1250 area, while ultimately only back below 1200 would really compromise the constructive outlook for gold.